You've essentially taken $27,000 and made north of $50 million from the markets. Is that true?
Yes.
And you learned to trade within 6 months.
Yes.
But what would you say is the number one skill or trait that has allowed you to make such returns from the markets?
Meet Steven Dux, an 8-figure verified trader that turned a few $1,000s into millions.
He holds the record for the highest P&L in a single trading day in 2022. Over $6 million.
In 2021, I did a really good month. I think in that month I made $20 million in 1 month.
When you had that huge month, what were you feeling at that time?
I was feeling on top of the world. About 226 at that time.
You were too.
Yeah, but yeah, anyways. People look at me as the best trader out there. I taught many students, 90% of them becomes gamblers. They make one huge trade and they think they can make it again. It's actually making a huge gain in one trade is not very good for beginner traders because they don't know how to handle that emotions. Then it turns into gambling habits and they just got addicted to it.
What do you say to those traders then when you see that happening?
Let me explain one strategy. So it's based on human nature. Originally, the strategy comes from human nature. So let me give you an example. Let's say you bought a stock at $10.
Do you believe that if traders followed, say, the blueprint of everything that you've done, that they could achieve the same results? Or do you believe that there's only a very few and finite amount of traders in the retail world and from the independent traders who can hit that 8-figure return level? The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Before we get into this episode, guys, I just want to ask for one favor. 52% of you aren't subscribed to the channel currently. So if you can just hit like and subscribe right now, it will help us more than you will ever know. It will help us bring you and continue to bring you the best 7- and 8-figure traders from around the world. Thank you. Now let's get into this episode. Welcome everyone back to the Words of Wisdom podcast. We are back once again and still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. And we're still on our US mega tour, which is brought to you by TradeZeller, the best trading tool for all traders out there. Thanks to them, we've been able to make this possible. We're actually here in sunny California, a very beautiful place, and we've come here for one person only. He learned to trade within 6 months and has taken $27,000 to multi-8 figures. And today we are joined by the one and only Steven Dux.
Hello, guys.
Thank you for being here with us today.
Oh, thank you.
And I really appreciate coming onto the podcast. It was a huge pleasure to be able to be here and to be able to see California as well as part of this trip.
Yeah.
So I really do appreciate it. But Steven, I want to get straight into it. You are considered probably one of the best traders of our time, especially when we're talking independent and retail traders. The results are exponential. And I've heard that you've essentially taken $27,000 and made north of $50 million from the markets. Is that true?
Yes.
And you learned to trade within 6 months.
Yes.
It blows me away. But what would you say is the number one skill or trait that has allowed you to make such returns from the markets?
It's been growing, I would say, at the very beginning. Not as fast as I thought it would, but once I get to, I would say, in terms of equity of $2 million plus, then that's where the growth has been sped up.
So is the momentum of it?
The momentum of it, yes.
And would you say there was a particular skill set that you had to acquire to be able to do those sort of returns?
There's a lot of things that needs to be acquired as a trader to, I would say, essential to not really give up in the middle of it. So first of all is the persistency and make sure that you're in the game for a long run, not seeing the instant gratifications for how much money you're making one day. So I see a lot of traders that posting that they made 60%, 90% even in one day of their accounts, but within 3 months they
Giving it all back.
giving it all back and potentially blow up their accounts. So first of all, make sure that you have a risk system that provides you enough cushion for you to survive in a long run, years to come. So I developed one of the systems for me is every time when I made a mistake, I size down into the next one. So 50% of the positions compared to the previous one. If I make a mistake again, then size down. So I keep my size in control so I don't lose sometimes 50% of my accounts. And that's one of the things that's very essential for traders, and also make sure to take your profits as well. Whenever you made a huge trade, I have to tell myself that I actually took a loss because I withdraw money from that trade. So let's say I made $1 million this trade. I just withdraw 800K. I will tell myself multiple times it's a losing trade because I just took 800K loss. So I only made 200K. And that made me more careful going to the next trade. Because you have to kind of counter human emotion, because human nature is very, I don't want to say greedy, but it is greedy. So the more you make, the more greedy you are. So I know that it's one of the big disadvantage that trader cannot avoid. So I just use that method to counter that emotion.
So did you feel like you almost hijacked that feedback loop?
Yes. There's a lot of stuff that I do pretty much in a very similar way. So I make sure that I myself stay in a rational, I would say, status to make the decisions.
And learning how to trade within 6 months, do you think that's something that other traders out there can do? Or do you think that's something more unique to yourself?
I was putting a really, a very urgent spot because my dad and my mom had its separations, and they were sending tuitions to me, so I had no pressures in terms of financial, but they had these separations, so I have some pressures of how to pay tuitions and where I'm gonna work. That's where it gave me sense of urgency that I started to learn probably in average 10 hours a day, including the weekends, and it doesn't really count. I'm listening to audiobooks while I'm driving. That's related to trading. And thinking about, I would say 10 hours of peer studying, and probably rest of the days are thinking all about trading. Coming up strategies, I would say I did that consistently 6 months. And I did a simulation for myself with the average reward per trade and the frequency, how many times they happen per year, and I can kind of run and the average winning percentage. So with those 3 factors, I was able to generate a simulated gain for myself, and it was pretty obvious. So I did by myself in real money. It came up, I would say 50% of the results performance-wise. I turned 27,000 into 900,000. So that's the first.
Wow.
Yeah.
And so that was the first sort of phase of taking that capital.
Yeah.
And would you regular pay yourself as well? Or
Yes.
Even at that stage?
Every time when I make a trade, I take about 80%,
Really?
50%, depends on.
What's the reason for that? Is it for that feedback loop?
Yeah, for that loop, yes.
And that's been from early on?
Yes.
And where did you sort of come up with that? Is that something you learned from somewhere, or just something you decided to do?
I just decided to do that because I keep making the same mistakes as a normal trader, because I made my big gain. The next time I tend to size much bigger than I thought, and I just give 50% of my gain, and it's really sucks. But
so it was actually kind of helped you to reduce that down by just taking the capital out?
Yes. I actually make more when I do that.
Really?
Yeah.
It's kind of the opposite of what most people do, as you say. Like most traders they'll make that capital, then they'll double the size the next trade.
Yeah, that's very similar to gambling, isn't it?
Yeah.
Yeah.
Well, exactly.
Yeah.
Exactly. And in terms of, if you were to go back, before we get there, during that 6 months, as you said, you would spend like 10 hours a day. Like, what sort of things were you doing? And like you mentioned audiobooks, like, is there any particular ones that you still remember that may have been helpful during that time?
There's a lot of books. I don't even remember at the very beginning. That was 10 years ago. trading in the zone.
Mm-hmm.
There is a momentum trader, I believe. And most of it I look at in terms of the books. I try to understand their psychology, not the method of trading, because the method has to be generated by statistics. A lot of people trading up to now is still not based on statistics, based on their instinct. So I want to take a look at their journey of how the mindset was, how did they go through their journey with their psychology, and basically when they make a profit, what's their reaction and what's their mistakes are focused on, so I can generate a method to counter that, to be able to avoiding those mistakes in the long run. One thing that I did is at that time there is Profity that traders tends to post their trades on Profity.
Was it like a verification platform?
Verification platform, but it's not very accurate. But right now, Kinfo is probably better. But you can. I don't look at other people's gain. I only look at their losses, and I want to go in there, find out, try to guess their entries and exit, and try to replay that day and how their mindset actually was going through different things, and I can make sure that I avoid that while I'm trading. So
you try to learn from their losses, try and learn, but then also not only learn from their losses or identify them, but try and put yourself in their shoes and see, what sort of mindset would it be. Would you actually go on the chart as well?
Yes.
To see these trades?
Yes.
What was the thought process behind that? Did you just come up with that yourself as well, and just was that something you thought this will be beneficial, more beneficial than say just reading the success stories of traders?
I don't know. I kind of I was an engineering major, so I kind of look at stuff different. When you want to make a car work, you have to test it 1,000 times, multiple mistakes. You always want to focus on the mistakes rather than what is been working. So that's the mindset that I have.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures, doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge, show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode. Well, I respect it, and I can see why, though, it makes sense and what you can learn from that versus how much would you learn from just looking at someone's winners.
Yeah.
You would just understand that they've managed to make so much money. And yeah, maybe strategy based, but you'd learn a lot more, especially as a trader, because as they say, losses are lessons, right?
Yeah.
But how many people actually are learning from their losses?
Not many people.
Exactly.
People are always focused about their gains. In social media, a lot of people talk about I made millions of dollars, and then people feel actually FOMO about it. So they will go into, their own account and make huge trade because they saw somebody make a bigger trade. That's one of the a trend for the trading community. So
you mentioned statistics. I really was interested in that in terms of what was your process of sort of finding out the statistics? What did you do to find out the statistics for your strategies and what you then utilized to trade?
So in terms of finding out strategies, okay, let me explain one strategy. So it's based on human nature. Originally, the strategy comes from human nature. So let me give you an example. Let's say you bought a stock at $10. Stock drops to $1. Next day, you feel very frustrated. After 2 months, stock hasn't moved at all. After 6 months, stock gapped up to $7, $8. Your instant reaction is to sell at open. There's no way, most of the time, 99% of the time, people want to cut their losses even. So I'm in there knowing you going to sell. I will place myself in a short positions. As soon as you sell, cause a huge red panic as other people having the same reaction, then I'll be able to take that 20% in profit. And that's the original idea of the strategy. Then you want to track down the market cap, which market cap works the best. Maybe it's 10 million to 100 million, maybe it's 100 million to 1 billion. You want kind of to narrow that down. So you want to focus on maybe 10 to 100, 0 to 10 million float. And those are just the criteria for this reaction pattern. Then you want to focus on the volume based. Volume is how many shares are traded in that day, right? So if that candle, daily candle is red, that means most people are selling. Then the stock gaps up to your original price. The volume has to surpass the intraday volume because there's more people that got stuck in there trying to sell it to you, or you're like the person who's stuck in the previous candle wants to cut it even now. So there's 10 people try to sell, 2 people try to buy, so of course stock goes down. So you can also try to narrow down the volume range. Let's say 50 million, 100 million, 200 million, which volume works the best, which volume has the best reaction. So you can kind of next time when you trade, you know exactly what you should do, which market cap, which volume, and which price range works the best, and how much do they generate in terms of reward. Let's say each time you place a trade, you make about 20-30%. I can narrow it down to in terms of a decimal point. So let's say for first red day, it goes down to negative 26.4% in average. So
like those level of statistics, that level of insight, rather than just, as you say, 30%, you're actually going to the decimal point. What's your process of collecting that data? Are you going through past data and putting these filters on, as you mentioned, whether it's the float, whether it's the market cap, whether it's the volume? Is this what you're doing? And then by doing that, you're creating the strategy, you're creating the edge based off the data you're collecting from the market?
Correct, yes.
So is it a case of just back testing, or are you live testing as well?
Live testing and back testing, yeah, both.
How important do you think it is for traders to go through that process? Because, as you mentioned, a lot of traders will not put in the necessary work, and a lot of traders aren't using statistics. They're using intuition, or maybe a lot of the time, I would imagine, they're just taking information maybe from online, whether it's a mentorship or a YouTube video, but they're not doing the actual work necessary to even take that strategy. They're just maybe taking a technical pattern only.
Yeah, so that's the problem of the traders. There's few things that you really have to know before you get into this industry. First of all is, as I said, that strategy comes from psychology, human nature. So you have to make sure that you understand the fundamental of the strategy, not just copying, there's a higher high from the previous day, then you buy. Not from a based indicator. It has to be based on a psychology that people tends to react. You kind of have to guess what people are thinking behind the computer, because everybody basically clicking their mouse, making their decisions. So making a counter strategy of the majority people of what they're thinking is very important. Number 2, backtesting is also very important, because statistics will give you very accurate where you should go in and where you should get out. And also what's the maximum reward you can get, because people go in and let's say they bought it at $2, they don't know where they're gonna exit. Yeah. They short it at $10, they don't know where they're gonna cover, and they might miss the perfect opportunity to cover, and the stock bounces back, and they missed the opportunity. They feel FOMO, and they make a mistake, then it goes downhill from there. So I've been there many times. That's why I have to be very accurate and precise about entry and exit. But the most important thing is the strategy has to make sense fundamentally. So if it doesn't make sense, if it's just a pure technical, you buy when the signal crosses here, you buy when the signal crosses here, it doesn't really make
When you say fundamentally, do you mean as in the fundamentals behind the stock itself, or do you mean in terms of the statistics?
the fundamental
And the psychology.
and on the psychology part, yes.
Okay.